Welcome to the Strategy of the Week presentation for October 25th, 2013. My name is Todd Shaffer, Manager of Research for VectorVest, and I'll be providing your strategy presentation this evening. Tonight's strategy is titled, Discover the Power of RMA. RMA stands for Relative Moving Average. To better understand the RMAs, let's begin with an understanding of simple moving averages. A simple moving average value is calculated by adding all the closing values of the included bars and dividing by the number of bars to get their average value. With the next new bar, we slide our 10-bar window to the right, adding a new bar and dropping off the oldest bar. The plotted average value moves over time, hence a moving average. Most of us are fairly comfortable with that concept, so the moving averages have a look-back period that's specified by the user. Generally, short-term moving averages use a relatively small number of price bars and react quickly to price changes. The long-term moving averages use relatively large numbers of price bars and react slowly to price changes. So let's take a look at a one-year price chart of the VectorVest composite. I've added three simple moving averages to price, a relatively short 10-day moving averages, and Dr. DeLito's acid test setup, an intermediate 50-day and a long-term 150-day. And just to keep them straight, you can see that the color of the line coordinates with the parameter list in the parameter box. And the first thing I want you to notice is the shorter the time frame, or the shorter the look-back period of the moving average, the closer it operates to actual price action. And in fact, price is simply a one-day moving average. And so the 10-day follows very closely, whereas the 150-day reacts relatively slowly to changes in price action and is further away. Moving averages in general are a very popular technical indicator and are used in two main ways. The first is as trend lines. Because they're averages, they smooth out noise and indicate the quote-unquote true direction of price. The longer the period, the greater that smoothing effect. And so using our three different moving averages here, we might say that price currently on both the short, intermediate, and long-term bases are in an uptrend because the slope of the moving average line is upward. However, if we come back to this last pullback in the short term, the trend had gone downward while the intermediate and long-term trends were still upward. And so the moving averages can be used as trend lines to understand the price trend of both the market and individual stocks in different time frames. The second popular use for moving averages is to use their crossovers. So the crossover of a shorter moving average crossing above a slower moving average is indicative of price acceleration and a bullish signal, usually to enter a long position, whereas the crossover of the fast moving average crossing below the slower moving average indicates deceleration and often an exit. The shorter the look-back period, the more the line will move, and the more actively one would trade based on those crossovers. Looking at this chart, if I was trading the VVC, when the price crossed the 200, or the 1 crossed the 200 as my entry point, I would have gotten this early signal, and I would have been in this stock the whole time. Were I to trade price crossing the 50-day moving average, I would have been much more active. Of course, instead of trading price crossing the moving average, I could trade the 10-day moving average crossing the 50-day moving average. Again, more actively trading, but it did eliminate some of the whipsaw signals that we had where price had come back down and tested that 50-day moving average. Of course, you could also trade price crossing the 10-day, but you'd have so much noise and so many false signals that it really wouldn't be a tradable signal. And this is, in fact, where moving average struggles the most, is when price action is non-trending and is either transitioning or moving sideways. But now let's discuss relative moving averages. Relative moving averages indicate the relationship of two moving average lines. We combine them mathematically by creating a ratio of the fast moving average to the slow moving average. Because this is a calculated value, it does require the use of our ProTrader module. ProTrader is included in the real-time subscription, or you can buy it a la carte by clicking the link in the views if you don't currently own it. There is a 2-week trial offered for that plugin. But the relative moving average is a calculated value, not a charted value. And our calculation is that the relative moving average equals the fast moving average value divided by the slow moving average value. This means that if the relative moving average value is greater than 1, then the fast moving average is above the slow moving average. If they're equal, then they're at their crossover point. And if the relative moving average is a value less than 1, then the fast moving average is below the slow moving average. Another neat trick is that if the RMA value were 1.01, for instance, then the fast moving average is 1% higher than the slow moving average. Or 1.1 would be 10% higher than the slow moving average. And often technicians are looking for follow-through, confirmation that that moving average crossover is going to hold. And of course the inverse is true also for the values below 1 at 0.99 or 0.90. This tool has at least two powerful implications. First, they can help us identify stocks that are in current trends by virtue of their RMA value. For example, looking at the VectorVest composite chart, you might look for situations where the 50-day is above the 150-day, or the 10-day is above the 50-day, or maybe even price is above the 50-day as an indication that the stock is in an uptrend. This is very different than looking for their point of crossover. In this example, the 50-day moving average is a very good support line for the price action of the VVC. The RMA allows me to confirm that price action is above that 50-day moving average and doesn't limit me to just the first 5 days of the crossover. Their second powerful application is they can help us identify extremes in price action, overbought and oversold conditions. We often refer to this as the rubber band effect. Let's remove the 10 and 150-day moving averages from our chart. Note that as price accelerates faster than the moving average and starts to pull away, it starts to increase the gap between price action and that moving average line. When that price trend breaks down, then price reverts back to the mean. And notice typically the more it pulls away, the faster it returns. So oversold market conditions would have a relatively high relative moving average, or RMA, because the short-term moving average would be higher than the mid or long-term moving average. Conversely, pullbacks, where the market is oversold, would have a relatively low RMA, because the short-term moving average would be well below that mid or long-term moving average. So for this next segment, I want to move into the live program and take a look at our market timing graph, taking it back to our last market bottom. Here we have our default market timing graph looking at a 1-year period. I have all the components of the market timing system on the graph. I'm graphing a 50-day moving average of the VectorVest composite price in the price graph. Let's take off relative timing. If I take our date way back here to the low, back here on November 15th, we can see that on that date the MTI value was at 0.61 and the buy-sell ratio was at 0.14. This is in keeping with our published values of 0.60 for the MTI and 0.20 for the buy-sell ratio as indicators of an oversold market. And look how far prices stretched away from that 50-day moving average. So we're looking for that explosive reversion to the mean that comes with bottom fishing. Typically, we'd use the primary wave change or the green light buyer signal to indicate that move. We're going to use our RMA tool to find stocks exhibiting the same behavior. Let's zoom in a little closer into this market period. I'm going to put up the green light buyer timing signals first, because these are viable signals certainly to get in early on the trend, but we did have a confirmed down call here in April that I wanted to note. We also traditionally have used the primary wave signal as the earliest indication that we're coming up off of that low. And we'll see it worked well here as price exploded off of that bottom as selling pressure was removed. The other thing we want to be mindful of is the first few signals in this market turn will be the juiciest. That's because as this explosive or blast off phase matures, when we get to about that 4 to 6 week time frame, we start transitioning into a more trending phase of the market. And that's the point where looking for stocks that are beaten up in price starts becoming less productive, and starting to look for the more traditional moving average crossover approaches is more productive. So let's move into the Unisearch tool and I'll show you how to build this search. We're going to start with the biggest bite of the apple. So we'll go right to our parameter window. I'll click on that window. We'll hover on stocks, hover on price volume, and select price split adjusted. Once we've selected that parameter, if we have the ProTrader tool enabled on our account, we'll be able to come to the operator window and hover on that ProTrader group. From the list of technical studies, then we want to select RMA. In the value column, when I left click on the value box, I open up the crossover value wizard. Tonight we're keeping it simple using simple moving averages, but you do have the option to use both exponential and weighted moving averages as well. Simply different smoothing techniques to that moving average data set. Next, we need to specify the look back periods for the two moving averages. First, we'll start with a 1-day moving average, which again is price, divided by the 50-day moving average. And now for our display only box, this is all our functionality. By opening that box, you can see we can specify a value, have it not equal to a value, be greater or greater than, or less than equal to a value, near, display the value, or sort. We're actually going to sort these values. Now when we sort descending, remember you'd have the highest values at the top, which would be the short-term moving average, higher than the longer-term moving average. We're at the bottom of a market, so we're bottom fishing, so we want to see the lowest values at the top, and so we're going to sort ascending. This will put the stocks at the top of the list whose price is furthest below the 50-day moving average as being oversold. And we'll click OK. Next, let's make sure that the stocks are Derby ready. Let's give them a price actual greater than $1, and we'll give them average volume greater than 100,000 shares. Next, let's make sure that we're filtered by the major exchanges. We'll eliminate contra ETFs. And the last piece of the puzzle, for those of you who are familiar with bottom fishing, we like to see stocks that have some fundamental strength. So we're looking for good companies that are beaten down. So we'll say that the RV has to be greater than 1 as an indication that they have some earnings growth and that these are stocks that have just been beaten down with that downdraft in the marketplace. In a typical bottom fishing search, you would see that taken care of with our sort, but this time we're going to sort by that relative moving average. Now let's run our search date back to November 20th of 2012. Which was our first primary wave coming up off of that bottom. And we'll run the search. And here's something we want you to look out for. Our first stock, Everbank, has no value for the RMA. This is because one of the moving average values was 0. If I click on the graph command, we can see the moving average doesn't start until January 22nd because I didn't have 50 days of data for that moving average to be calculated, as the first data point for this stock entered the database on November 8th. And so to eliminate that error, I can add one more line of criteria to my search criteria that we're going to look for the stock's RMA value to be greater than 0. And if we rerun the search with that line of instruction, it eliminates any of those with not enough data. Here the system is listing our RMA values in ascending order. Let's display only the top 10. We'll limit the list a little bit, and we'll minimize our toolbar. We'll come to the bottom and tag all of our stocks. Right click and let's take a look at their graphs. Now our search date was on November 20th. Let's locate that date. And look how far price had pulled below that 50-day moving average. And so the market turned and the stock price started coming back up. Let's maximize our window a little bit better and let's just scroll through some of these. Velti had an initial surge before falling off. OCZ had an explosive move and a nice run through the February time frame. And so you can see we're trying to get that initial pop as we just scroll through these charts. Some are better than others, to be sure, but that's kind of the nature of the game. Let's look at how the basket performed. So our 10 stocks are still highlighted. Let's do a quick test. And of course, through today, they're up 161%. But as we said, there was a confirmed down call in April, so we would never have held them through this whole time frame. So let's adjust our end date on a monthly basis to get a feel for how this would have traded. So changing my end date now, I'm going to come back. And let's go out to December 20th. So after a month, you have 9 winners, 1 loser. TSL is up 92%, so some big gainers here. OCZ up 74%. The basket's up over 28%. Septupling, boy, you don't use that word very often. The market represented by the VVC up 4%, which annualizes at almost 350%. Well, let's take it out another month. Let's go from December now to January. And we'll go to the 18th because the 20th was on a weekend. Up 39%. Let's go to February. Fell back a little to 35%. March. Holding our own at 35%. Remember, we had a confirmed down call, so the market started pulling back here into the middle of April, where we finished at 18.21%, 45% annualized. But I like to do that exercise because just running from point A to point B doesn't really give you a feel for what happened in between. And of course, we had no money management in place for this either, and we do have a couple of stocks that have hit home runs pull back. VELT back 49%. Another method you can use to do the same kind of methodology, if you will, is you can use the quick folio tool. We're going to take these 10 stocks and put them into a quick folio, and let's just call this RMA November 20. We're going to purchase long, we'll click OK. It automatically puts those 10 stocks into a portfolio, so we're going to go to the portfolio tabs now through the link. And here's the portfolio we just created. Let me minimize the portfolio toolbar. What I have now is an equity curve of that portfolio of stocks. And as we said, we had that confirmed down call here in April. Well, the portfolio manager doesn't know that. It just brought it up to current, but I can still learn a lot by looking at this equity curve in that time. And here I can see that performance did pull back coming into that confirmed down call, but I can also see that performance peaked here mid-February at about 45%. Well, that works out to almost 330% on an annualized basis before you started giving things back. And so with some money management, I might be able to retain more of those gains. So let's do the same exercise with the next series of primary wave signals that we got. So we're back to the Unisearch tool. Now that primary wave initially lasted several days, but the next time after a primary wave down, our next up signal will be signaled here on our calendar was December 10th. Let's go to December 10th, we'll run our search, and we'll quick folio those, and let's call this RMA December 10. We're going to buy long, click OK. We'll open the portfolio here in a minute because first we're going to change our date to the 17th to run the next primary wave up. Run the search, quick folio all, RMA December 17. Choose long and OK. And let's go to the portfolios. Opening our window, we'll start with the 10th. And we see similar performance with that initial surge before portfolio performance started pulling back coming into that confirmed down call. We peaked at about 18% or about 157% annualized. On the December 17th series, again, we surged to this peak of about 13%, which annualizes at 84%. So some very nice performance using RMA to find these overly suppressed prices. in this bottom fishing mode. And of course, the RMA can be used standing on its own as we are here, or in combination with any other VectorVest indicators or searches you'd like to use. And of course, as the trend started to mature and we started getting into that January, February time frame, as we replaced positions, we would have started transitioning into that trending kind of approach. And as we discussed earlier, the RMA can help us with that situation as well. Let's go back to the Unisearch tool. With one simple change to my search parameters, I can now start looking for stocks that are above their 50-day moving average. I'll simply come in the value box, and my 1 divided by my 50 is now greater than 1. And notice once we changed that value from sorted, we reverted back to our default VST sort. So now I'm looking for the top VST stocks whose price is above their 50-day moving average. And again, part of the flexibility of the VectorVest tool is that you can set those values to be whatever you want. Again, do this on a standalone basis or add this to any search that you already like and use. But let's bring this date current. And let's run the search. Let's graph the top 10. As we scroll through these, notice how I now have top VST stocks operating above their 50-day moving average, even though they might have experienced a recent pullback in the price action. And this is quite a different approach from looking for stocks that just recently had their crossover. Well, I hope you enjoyed this primer on relative moving averages and developed a sense for how they work and how powerful they can be. VectorVest makes it easy. If you have any additional questions, remember we are doing our live Q&A webcast on Monday at 2 p.m. I'll be back with you at that time to answer any questions you might have. To register for that event, go to our website to the Events tab, or click the link within the VectorVest views. Also, I invite you to call our product support department 24 hours a day, 9 through 5 on Saturdays, and of course the VectorVest University to review this and other previous strategy presentations. And with that, I'll say goodnight. Have a great weekend.